The new corporate offence of failure to prevent fraud comes into force in September. It covers different types of fraud, including tax evasion, meaning there's a clear impact on HMRC investigations. There's also a clear overlap with the existing Criminal Finances Act, or CFA, offences. Both regimes apply the same failure to prevent model, and there are shared principles across the two. However, there are also key differences. For example, the new fraud offence only applies to large organisations, whereas the CFA offences apply to businesses regardless of their size. Another really important difference is the scope of associated person, which under the new fraud offence applies to subsidiaries, which would only otherwise be caught under the CFA if the subsidiary was performing services for and on behalf of the relevant body. In that respect, therefore, the new fraud offence is potentially broader than the CFA, making it easier potentially for HMRC to target corporate groups in relation to tax evasion. There haven't yet been any prosecutions in relation to the CFA, but I think it would be a mistake to think of this as a theoretical risk, and there are already signs that HMRC are gearing up for their first prosecution, including announcements made at the spring statement. We're already seeing the CFA being added as part of HMRC business risk reviews, and it's likely that you'll also see the new fraud offence being added to that as well, with two regimes operating in tandem. In short, the new fraud offence is expected to add a further impetus for HMRC to target corporate groups in relation to tax evasion. If you'd like more information about how this could potentially affect your business, please let us know. Thank you.